Welcome, Fintech Talkers, to another edition of the Fintech Talk Show. I'm your host, Patty. My guest today is Sharon Rodriguez, CEO of HighPeak AI, an AI-powered platform backed by Prudential that's helping financial advisors and insurers better plan for the future by forecasting healthcare and long-term care costs. Sharon's also a venture partner at 1843 Capital with active investments in longevity focused innovations. Welcome, Sharon, to the FinTech Talk Show.
Well, thank you for having me, Patty.
Awesome. This is going to be a great conversation. I've covered a little bit of insurance and insurtech and related fields, but not too much. And you're doing something very cool, Sharon. So I want to get into it. But before
Sure.
we do that, can you kind of introduce to our audience a little bit about yourself? Talk a little bit about yourself, what led you to this,
Sure.
and even talk about any hobbies and things outside of work.
Sure. I have a life outside of work. So I came upon High Peak and I like to tell everybody I came to High Peak at what I would say is kind of an inflection point in my career, right? I had spent a number of years in the insurance industry, really focused on strategy, technology, operations, and bettering the experiences of both internal and external customers. And then taken that and been the head of global IT strategy for MetLife. Spent a number of years traveling the world and seeing how different businesses were run. So really kind of seeing the variety and the flavors of products and markets. And then came the opportunity to start a company. And so I left with some of my colleagues and started a company called Uncork. It was one of the first in the no code space a number of years ago. And we grew like a rocket ship from four people sitting in a room to 650 employees, from a quick seed all the way to a Series C in about 3 years. Kind of have gone the full ride. Took a little step back after a few years and the Series C, and decided to do venture investing. It's really somewhere that I felt like my operational experience would be very helpful. And I think that the space of longevity, at the time, we recognized that there weren't a lot of people playing in that market. It's very nichey. But as I've been mentioning, the silver economy is an $80 trillion economy, right? And if you look at the population of the United States alone, it is almost 20% of the population is 65 years old and older, right? And longevity is a key component of a lot of the major economic issues that are facing this country today. And along came High Peak. And High Peak was really an opportunity to work with Prudential, which is an incredibly well-respected insurance company. It was working on a novel concept for them, something that they're not used to doing, which is building a software company, right? And also it allowed me to spend more time thinking about how we could build this business, commercialize it, and bring it back to being an investable asset in the venture world. And so the combination of all those things made it a very exciting opportunity to take all my experiences and drive them forward. And when I'm not at work, I have a 4-year-old. I have a dog, oh yeah, and a husband, and live in New York City, and love doing so because the energy here is like none other.
What kind of dog?
Oh, he's a lab mix.
Oh,
I'm a big believer in getting rescues.
oh, okay, that's great. We have a lot mixed too. She has a little bit of husky and a beagle, so it kind of
Oh, that
has.
bark.
Yeah, they do bark and sniffing, a lot of no, a lot of smell. But what an amazing background. So you were operating in the
Mhm.
insurance kind of operations and technology and strategy, then did some investing, and now you're doing a startup. So kind of a blend of both worlds, right? So
Mhm.
you bring everything. And I know in my introduction I did say that you're still a venture partner at
Mhm.
one of the funds. So are you still active on the
Yeah.
investment?
I actually don't think those things are mutually exclusive. I think in being a startup, the best thing you can do is always have a network. and always have your fingertip on the pulse of things that are happening in and around the world of startups. I think it keeps you fresh. It keeps you getting new ideas. It keeps you thinking about what the art of the possible is. And so I actually think that being a CEO in a startup shouldn't be so linearly focused on only building your business, but also understanding what's happening around you. Because if you focus too much on what you're doing, you might miss something.
Yeah, yeah. And you mentioned silver economy. So
Mhm.
that's 65 and plus, Sharon, or
Yeah.
what is that defined as?
65 years old and older. Yeah.
Okay. And longevity is a big concern, obviously, but
Hmm.
long-term care costs, and let's kind of get into that. So
Sure.
what's kind of broken? So obviously
Mm.
it's a big chunk of market. You talked about it. I think you mentioned two how many trillions was it?
$80 trillion
Oh, 80
market.
trillion. Wow. That's huge. And but what's broken or outdated on
Yeah.
kind of the silver economy or what services for the silver
Yeah.
economy as well as healthcare and long-term
Yeah.
care costs?
So I think, the concept of high peak really came from a couple of key points. One being that while people were really interested in knowing how long they were going to live, they were more interested in how they were going to live well during that time frame. And the things that came up to the top and bubbled up to the top that were part of what was keeping them from that, 60% of the people that we talked to, or over 60%, said, I'm anxious about what my healthcare costs are, and it's really making it hard for me to enjoy thinking about what retirement might look like. And so that's kind of the aging population. And those that were 55 plus, right? And 80% of those people were also saying, I'm asking for help and I'm not sure I'm getting the help I need. 90% said, I am totally lost on this long term care thing. And it's a really scary number. Right. And all of that just meant there's not a lot of transparency. And then there's gap in the market in terms of what the needs of the individuals are and the information that's being presented to them. And there are a lot of big players in the market that do financial planning and that present information. But I think the thing that's been missing, and I think where people felt that they didn't have the transparency they wanted, is truly in that personalization. And in a world where Spotify is giving you your favorite playlists and Amazon's telling you what next thing to buy, expecting to have personalization when it comes to big ticket items and big emotional items like healthcare and long term care, you expect a level of personalization that you're not getting. And therein lies the problem.
Interesting. Yeah, no, and in the world of AI, I'm used to this hyper personalized at scale term, right? So, and you're doing that, and you have an AI component. We should talk about that.
Mhm.
But you are bringing that to financial planning, especially on these long-term care costs. So, one thing that came to mind, Sharon, is that I'm familiar with the usual
Mhm.
financial planning tools that advisors use, like the
Mhm.
Money Guide Pros and the others, and it's a fragmented market, but there was some consolidation
Yeah.
earlier on. So what High Peak is doing and what you're building ties into that, or it's a separate kind of standalone to just address the long-term care cost.
So funny enough, we do have conversations ongoing with some of these planning softwares because they do see that while they provide some of the information that's required, they don't provide all. And then there's a really nice collaboration that can happen between the types of insights and information that we want to provide and the way that they work with clients. The reality is that advisors today, 60% of them don't feel that they have the right tools necessary in order to provide their clients with the level of personalization that they need. Also, when you're looking at generic tables, generic actuarial tables, generic social security information, and this is the type of information that's cobbled together to provide answers or to help guide a consumer through their planning process, it's not enough, right? And that's where this concept came to us, where individuals were saying, I don't believe the information that's being presented to me. No one can explain it to me. And as a result, I'm halted from taking action, right? And those three things are kind of the basis for how we work. We wanted to make the information you have in front of you believable, right? And it's believable when you answer questions and you self-direct a survey into into the models to provide you an output that then we can explain to you the patterns that are going to happen based on those models and predictive behavior. And as a result of that, you are now going to be and are prepared to take some sort of action in order to solve for the problem that you have in front of you. And I think when you're presented with that difference between what exists today, generic, high levels of inflation, not a lot of talk about predictability, right? Not everybody's going to need long-term care, and not everybody's going to need $800,000 of long-term care. There's some way to start to refine the perspective so that people are prepared for more of the possibility of what's really coming your way, and not just some arbitrary number that's thrown at you without context.
Yeah. No, it's interesting. I mean, we have two high schoolers. One's getting ready to go to college, and we did that kind of planning around college costs because college is not cheap. But there's a lot of data available, a lot of tools available, and a lot of products available. But it's amazing. Everyone's going to get old and they'll have care needs and stuff like that. But there's a dearth of kind of tools and discussions around that. So you probably hit into like almost like what they call the blue ocean, right? So it's
I
it's
hope
not
so.
no, and that's great. Meaning, and I think Peter Thiel or the others have always talked about, right? You don't want to be in the red ocean. You don't want to be doing what everyone's doing. Kind of find a new problem and solve it kind of in a scale manner. So let's kind of dwell into that. Peel the onion a little bit. So HighPeak, how you alluded to a little bit, you collect information from surveys, it's hyper
Mhm.
personalized and all, but kind of how is it? Where does it fit in? What's your distribution model?
Okay.
And how does AI? Everyone wants to
Sure.
talk about AI. How does AI
Yeah.
play a role?
I guess I'll start with the product and give you kind of a perspective on the product. The
Sure.
product is really differentiated in that we have data sources from Prudential and their broad books of business, right? So we're leveraging underwriting outcomes from the individual life insurance business, as an example, all the way through back testing both rejected and accepted applications. So we have a real understanding of progression and death, right? So longevity. We've leveraged our long-term care book of business. We have 30 years worth of claims, active policies in play. What can we do with that? We can understand some of the drivers that will lead you towards long-term care, the probability of you needing it given some of your health history, the duration, right? And quite frankly, that duration then leads to the next question, which is what types of care could you use, and what are the economic implications of decisions that you're going to make about the types of care that are available to you in a long-term perspective. So all of those things are a culmination of leveraging not only the Prudential data, but also third-party data sources in order for us to have a very robust set of data that accounts for differences in the population, right? Like Prudential has a population, but some of the larger data sets that we're using allow for us to have a broader perspective. And with that, we've created three models that underpin our solution. Our solution is one which is meant to be used by an intermediary, be a financial advisor, be it a broker dealer, be it an insurance agent, right? It is meant to help create an engaging and sticky conversation with their end consumer and their end client, right? Their client receives a survey. That survey is a series of questions about your lifestyle, your demographics, and your health history. That then runs through the three models that I mentioned, and it produces an output, Monte Carlo simulations and such, for the advisor to use in a guiding conversation with their client. Those are things like there is a high probability that you will live well beyond the national expectation of 74. It is probably closer to 90, whatever, right? And for some people, it's closer to 84, right? It depends on your health history, your lifestyle, and your demographic profile. All the way through to healthcare costs throughout your lifespan and long-term care. We do that inclusive and exclusive of inflation rates because inflation rates can get scary, right? But we also allow for customization. We allow for the customer to say, you know what, I'm gonna work till I'm 75. I'm actually gonna retire in Georgia, not in New York State. Some of those things are big driving financial factors, but there are also some really interesting factors, like if you move to certain states, the cost of living might be lower, but the quality of your care might go down, and the access to care might go down. And as a result, it might be actually detrimental to your health in order to make a move of that nature because you don't have what you need in order to be well. And so those are the types of outputs that we have currently in the out of the box solution. How are we distributing? We have a couple of different forms for that. One, we have actually, you can buy it on our website. You can log in as a financial advisor and try our solution, and then buy an annual subscription to use to run reports on your entire book of business, right? We have enterprise clients where we're working on more custom solutions, et cetera. And certainly we're working through partnerships, even with some of the planning softwares that you've mentioned, right? To figure out how to best incorporate the insights and analysis that we have into the planning process. And so it's a variety of different ways in order to make sure that we put the information in the hands of everybody who needs it, right? I think one of the things that you want to do when you sell information of this type is to democratize it in any way possible, right? Because it's not just valuable for some, it's valuable for many.
Mm. Yeah, no, it's amazing. Meaning it's highly personalized, customized, and very tailored to the specific situation, and obviously backed by a lot of data. You said 30 years of claims data and a lot of the potential data, obviously. But question around, meaning obviously a lot of people care about privacy and like
Yes.
that. So you're dealing with highly personal, future-facing health and financial data. So how do
Mhm.
you maintain both user trust and data accuracy?
Um, trust is actually the number one thing everyone should have in a business of this nature. And look, quite frankly, I'm a wholly owned subsidiary of Prudential. It is the number one thing that we worry about, and ensuring that people's data privacy are the reputation of this company are intact. And so there's nothing that we've done in the course of building our business that doesn't have that top of mind. So I can assure you we have gone through extreme extent to ensure that there is privacy and security is accounted for. Also, even down to the survey, we went to exhaustive measures to ensure we weren't collecting HIPAA, right? We actually reworded and wordsmith and ensured that we got the right questions, right? To be able to drive a model and an analysis, but that we were not crossing the line to HIPAA, because that was really important to us. And I think it was really important to the users. And, we're completely secure and locked down. So I think that anybody who uses us should keep that in mind. We come with the thought process of being an insurance company. It's low. We have a very low tolerance for risk, and as a result, everything's locked down.
Yeah, and at the aggregate level, I know you're targeting the personalized and
Mhm.
providing personalized insights, but I was kind of putting a public policy hat. I mean, they always talk
Mm.
in DC about Medicare or cuts in Social Security running out and that kind of stuff.
Mhm.
So you're sitting on top of data, and when you aggregate this, you can kind of predict better maybe if is it sufficient or is it not, and so on and so forth. Are you kind of looking into that kind of an aggregate level? How good?
From a policy level, I wish more people would get on board with having that conversation, because if Prudential has the power of the data, so do the other providers that could actually help even further dimension this. Can you imagine how powerful it would be to
Sure.
create a consortium of that data to provide that feedback?
Yeah.
But I'm not a policymaker.
No, fair enough. Maybe somebody hearing
but
this will
but
start some ideas.
yeah, but
Yeah.
certainly, like, what wouldn't that be an ideal place to look for information? Look, the government collects data, right? CMS, they are constantly considering the options, but there is a level of real-time information that exists in all the health and life insurance carriers that is extremely valuable if put in the right hands.
Yeah. So your model currently is B2B to C, or
Mm-hmm.
going to either
Yeah,
advisors can come directly to you or through their firm. I know there
right.
are a lot of independent advisors too.
Correct.
They can kind of just come to you, but it's kind of B2B to C type model.
Mm-hmm.
Um, are you envisioning a potential B2C where like I can log in and put in my data, or is it still a certified advisor that you're targeting?
So the reason we went for the advisor, and just to be completely transparent, is that information is hard to interpret, and then what to do with it becomes very hard to interpret. So you can arm people with all the analysis in the world, but it's really important that they take action, and so it needs to be with the right intermediary in order for that to happen, right? So I think part of the motivation and presenting the product in a B2B to C model is that intermediary is an incredibly important uh, perspective that the end consumer needs in order to interpret the information and take action on it effectively. Some people can do that, right? But I think in the main, products are confusing. Decisions are difficult. And you need to be presented with someone who actually has your interest at heart, but also has the skill set to help direct you to the right path. And I think that's the reason. Do I think ultimately having information of this nature, as I mentioned before, democratized and in the hands of individuals? Certainly. It's absolutely something that we could aspire to get to, but products are hard, right? I've been in insurance for a long time. You have brokers and agents because it's not that easy.
Yeah, yeah, no, totally. And you want to kind of have the impact and provide the guidance with
Yes.
your product and with your solutions, but there might be solutions that are products themselves, right? To
Mhm.
address, say, if there's a gap. Um, so that might be more of an interest to a player like Prudential. But do you have some thoughts on that? Like reverse mortgage comes to mind, right? Those are solutions that are
Yeah, 100%. So one of the key premises of this business is that we're agnostic to what people end up doing with the analysis, right? So have I thought about reverse mortgages? Sure, that's absolutely on the list of products that could be a help, right? We've thought about things like continuing care retirement communities and how this information might help in planning and guiding people through why they would want to sign up with one earlier in order to alleviate the pressure of making a decision at a later stage that might be economically more difficult, right? So some of these other adjacencies are absolutely at play. This product is not meant to say, I can only sell X or I can only sell Y. It is meant to provide you with the insights and the information that help you make good decisions because you now have more transparency into the things that in the past were considered black box.
yeah. And earlier you mentioned about the 80 trillion silver
Mm.
economy space. So that's a huge. We talk in terms of TAM in the investment world, and as you're familiar with, maybe not all of that is TAM, but it's a
That's not, yeah, yeah.
it's a
I mean, but
significant.
that is the money and the wealth that is held by people who are 65 years and older, right?
Yeah, yeah.
And it's meaningful. What's actually really interesting, and what I think you will find very interesting, is that when we started this journey, everybody was talking to us about just that retiree market because there was this perception that if people better understood and could plan better through the retirement and the decumulation of their assets, some of the anxiety of retiring would go down because some of the anxiety of retiring is I no longer have a paycheck and now I need to live off what I have. And what if I have a health event? Certainly, we see that. But what we've also seen is really in our market research that people 35 to 55 are super interested in this. And the reasons that's kind of coming to a head is the fact that they're seeing their parents have to take care of their elders. They're seeing kind of the fact that not everyone's saved for retirement effectively. And so that younger generation is seeing what's happening in the older generation, and they're starting to want to take action. And so, when you consider that, um, that market is actually ripe for having the conversations earlier and more often that allow for them to make choices at different points in their life. To your point before, I'm going to have to plan for making my child whole when they go to college, right? You don't want to leave them burdened with a lot of debt, but what choices are you going to have to make to offset that? And I think that's where we're seeing a lot of real interest. Not surprisingly, 55-year-olds today are 2 times more likely to be taking care of their parents than prior generations because of longevity.
Mm.
They're 3 times more likely to be taking care of adult children because of pure economics, right? And so when you think about that, that's the generation that now is saying, how do I handle that? And then someday retire myself.
Yeah, no, it's fascinating. So, well, maybe a good segue to talk about the future. And I like to talk quite a bit about that, not the immediate future, kind of fast
The
forward. Long.
fast forward future.
Yeah, the vast future. And there are several ways we can kind of talk about it. Maybe we should address each of them. So obviously AI, agentic,
Mm,
humans or knowledge workers getting replaced by agents. So
hmm
potentially a financial advisor could
hmm
be an agent, right? So I want to get your thoughts on that, especially as it means to financial planning, wealth management, wealth advisory, and what the role of AI as not just the tool to crunch behind, but actually be the point of contact, right? A replacement to the human advisor. So that's one thing. Um, but then the other developments in fintech, and I'm sure you track this, like Revolut, the challenger bank, they started, I think, a wealth management sub or a business.
hmm
And I think it's more for the mass affluent in that
hmm
segment, and that's always a big segment, maybe not the biggest in terms of assets, but it has the
hmm
scale. And we've seen that over the years, right? So there was the discount brokerage, and there was this hybrid model, and then you have the robos. So that every 10 years or decade or something, there has been going on. So what's maybe just not planning, but more wealth management? What do you
hmm
kind of see in the trend? And instead of giving you all the questions at one time, maybe let's take one at a time. Which
Yeah.
of these two would you like to take first?
So I'll start with the AI one.
Okay.
Um, I, I think the world is changing 100%, right? I met with someone yesterday whose whole premise is that they can go through job descriptions and define which one of those jobs should be replaced by agentic AI, by a hybrid, or needed a knowledge worker, right? That's the whole premise of their business, being able to do that. That is clear and present. What is also clear and present when it comes to difficult things like financials and financial planning is that despite best efforts to completely automate that, what we've seen happen is that there has to be a human in the loop to some extent at this point. I'm not saying it's a never, but I'm saying at this point, people still want the connection point with someone to help them make decisions that are incredibly difficult in their life, right? Or to interpret the terms and policies of a product they're going to purchase, whatever that product might be. And while AI can help the individual better explain and get to a resolution more quickly, that human is still involved in the conversation. So the way I see AI playing out very much in this space and have seen it with the folks that we're talking to, it's not so much the robo or the agentic, but the enablement, right? And the enablement and presenting people with information that helps people get to the right end answer more quickly, but also behind the scenes, all of the other areas where AI and agentic AI help make the transactions more seamless so that the experience is better, right? So
Mhm.
there's I think levels to the way that AI is rolling out. Do I think that there's a future state where we've replaced the agent altogether? Well, we've been talking about it for a really long time and it hasn't happened yet, right? It's happened to some extent in that they've tried to push too far and then they came back and said, well, we can't really do it.
Right.
And so what you find is a lot of heavy tech enablement to make people more effective at their roles, which I think is actually a dreamy state to be in. And that our jobs as technology creators is to bring solutions to bear that make that happen at speed and at scale. I think that's kind of like my perspective on AI. And I think that as a result of that, the financial planner's role will change into being actually a little bit more complex. So it's not just about, hey, I'm going to put your money in this fund and hey, here's some fixed income stuff. Now it's like, okay, let's talk about the whole of your life.
Mhm.
Right. And that includes things like risk management. That does include your portfolio and your portfolio planning. It might even include your health, your longevity, right? Like, how do we get you to the right types of physicians so that you're in a better health state for longer, so you don't eat into your funds because of that, right? So I see the role itself evolving because you are now enabled by better tools so that you can create a stickier customer behavior to that advisor that's a bit different than what was more transactional in the past.
Yeah.
So I think that's a win-win.
Yeah, no, I like it. I like the human emphasis and human in the loop angle. And and we talk about this framework about chatbot to copilot to agentic,
Yeah,
where agentic is just like no human in the loop, so to
yeah,
speak. But you have kind of almost an intermediary layer. It is agentic, it is holistic, right? It won't just do what a typical planner would have done, but it could add more, like the physician recommendation was a classic one, right? So it add in new value added stuff. So it's almost a layer between the co-pilots, more than a co-pilot, but it's also kind of the hybrid with the human in the loop. I love it.
yeah.
That's great thoughts.
I mean, and I think I think that would add a lot of value, and I think people would be willing to pay for those services, right? I
Yeah, yeah.
think part of it is like you've gotten to the point where when I go to do something, I'm like, if I were to do this with a company that does agentic AI, is it cheaper?
Mhm.
All right.
Yeah,
So I actually want to get value for my money, because I know your margins are better
true,
now.
true,
So
true.
what am I getting as a benefit for that?
Yeah.
So I think that's the first one. And then the second one, remind me on the Revolt
Yeah, the second.
Wealth Management MA.
Yeah, maybe I'll paraphrase because it kind of ties
Yeah,
into agentic
yeah.
management. So if you think about the challenger bank, the neobanks, so a lot of banks,
Hmm.
digital banks, and they have not taken over. I mean, they have
Hmm.
a small
Right.
chunk of, but the Revolutes and
Hmm.
Chime supposedly going IPO this year. I don't know. I haven't seen it,
Yeah.
or maybe it's been announced. So will that same thing happen in
Mm.
Well, right? And one could argue it's already happened in some flavors with the robos and the discount
Yeah.
managers and so on and so forth. And the Revolut was the more recent, that it's a digital challenger bank announcing a wealth unit to address, right? So it's a digital only. You don't have
Yeah.
a advisor kind of in person. So draw that out just like you did for agentic. How do you see the wealth management? And it's kind of hard, right? The alternate high net worth or to mass
Yeah,
affluent.
I think it's a spectrum, right? So I actually don't think it's a one size fits all, and I think that's the case. That's why segmentation happens, right? And that's why I said the point about paying for services, right? Someone who's ultra high net worth has much more complicated perspective on their portfolio, and therefore needs different services and has different expectations. Hard
Yeah,
stop, right?
yeah.
That's hand to hand combat. But in the mass affluent, you definitely see the need, and part of it is also is and I don't want to sound ageist here, but it's age, right? I think when you start to think about kind of growing up with the phone in your hand and always knowing a digital world, your expectations of how you interact and do business is very different than someone who grew up in a world with a landline, right? And not to date myself. But it is a different experience, right? And so I think there is a time and a place for wealth management to be much more technology forward and to be self-directed a bit, with folks that have a smaller level of asset sizes, but also lower complexity in their environment. And I do believe that personalization tools help them guide them to make better decisions, right? So a lot of these tools have like quizzes like, oh, well, you want to have a kid, let me ask you some 10 questions, like, do you want that kid to go to private school? Do you foresee yourself doing daycare? Like all of these questions that help you kind of dimension what the problem is so that you're given enough information to make decisions. And And I think that there is a market that's absolutely ripe for that. I think as you go up the complexity spectrum, it becomes harder to interpret those results because sometimes the answer is yes and when it becomes yes and there's not a tool that helps you through the yes and so that's when you start to need different types of services.
Yeah. And if I can stretch this, Sharon, given that you have so much insurance expertise in your background in insurance, kind of the same questions on the
Mm,
future of insurance, right?
mm,
So it is a tightly regulated market. There are barriers on what they can do and cannot do and things like that. But one of the trends, especially in consumer financial services that I see, is like BNPL, which is a very consumer product, is looks like a loan, but it's also a payment, right? You made kind of intersection of two financial
yeah.
products, if you will, right? So it sits on its own. It's now called
Mhm.
installments, right? It's a new product. So in a similar vein, so obviously insurance, wealth management, planning, they all kind of intersect.
Mhm.
Obviously, there are some boundaries, but how do you see the insurance business kind of evolving, kind of in that grand future view?
I think products will need to evolve to fit the needs of the people today. And many of the products that we have suit a world we used to live in, right? And I believe that data will lead us to what the new products are, and the market will drive decisioning. And I think that's what most of the incumbents are working towards right now, because the opportunity to provide risk management or protection for people is absolutely there. How people consume it or want that product to look has evolved over time, right? Knocking door to door salesmen who sold life insurance policies when you knew you were going to die somewhere between 68 and 72 is a different product than when you're thinking about what's my life going to be and do I want to burden my next generation with potentially my healthcare cost or I want a product that's very focused on a certain aspect of my life. You're seeing that evolution both on the property casualty side and on the life side, right? You're seeing that kind of evolution of products to fit the needs of individuals, and I think rightly or wrongly, the regulators are going to have to flex a little bit in order to adapt to that because that's what the market demands. And if they're really their intermediary between the carrier and themselves, right, to make sure that they're protected, they're going to have to adjust to meet the needs of the population at large.
That's very interesting, Sharon. And you're doing that. You're not doing it in the full insurance world, but you're hyper personalized. Your service is super personalized. So you're saying that insurance products will also start getting hyper personalized. Obviously, they're sitting on the data. AI can be an enabler.
Yes.
That's beautiful.
Yes. And you can see it, right? But again, to your point before, the regulators have to evolve with it, and it will take time.
Yeah.
But I do think that the market itself will demand it. And so the regulators are going to have to meet the demands of the market, not just a carrier coming in with a novel idea.
Right. So you see tech activity in this space happening.
Um, I've seen and heard rumblings. I haven't seen anything that I would say is notable
Mhm.
yet.
Okay.
But
That's
I say it very keenly knowing that there's a yet there.
Yeah, yeah. There's a yet, and like you said, the regulators have to evolve, and
Mhm.
I think tech has had a lot of activity, but obviously all the attraction is in consumer financial, like the banking and payments have taken all the oxygen. But maybe it's the right time with AI and with the data and things like what you're doing that could trigger. I had another gentleman on my show who was doing the secondary insurance, so he had
Mhm.
a new product and I learned a lot about the whole space and how he was doing and things. So no, that's great. Love to talk more about the future with you, but we're limited on time and you are limited as well. So in closing, Sharon, who are you looking to connect? I have a broad audience, mostly domestic.
Mm.
I'm overseas as well. I take it you're just focusing on the US market, or is it US and Canada?
It's mostly the U.S. market. I believe our results would probably be a bit skewed for a Canadian, given socialized medicine and such.
Right.
But certainly over time, I aspire to be more global in our approach in nature. I definitely think that our goal is to connect with as many people who really are curious in the availability of the types of insights that a high peak can deliver, the value it can bring to their customers to not only meet their needs, reduce their anxieties, help them plan better for the future, and just create better relationships for the longer term. And certainly that crosses across a lot of different product lines and roles. So I'm not going to segment us and say we only want to talk to. We'll talk to those who are interested in knowing and learning more,
Mhm.
because I do firmly believe that what we're bringing to bear is really valuable, and we wouldn't be doing it. And I can speak for the whole team. We wouldn't be doing this if we didn't think we were actually doing something really good.
Yeah, yeah. And so definitely advisors, wealth management firms, asset management
Broker
firms,
dealers,
broker dealers.
insurance agents,
Mhm.
brokers. Yes, all of the above.
Yeah. And a lot of my audience is obviously startups and
Yeah.
stuff like that. They might be
And look,
interested in.
there's like companies that we're talking up to in the startup world where we're partnering with them, where we have something super complementary in terms of our skill sets and capabilities. We're touching a similar customer base, but we do different but truly hopeful things for the audience. We definitely talk to startups all the time. And
Great.
like I said, it's always good to know.
No, definitely. And you get good conversations, especially if you start with some of the entrepreneurs and the problem
Yeah,
solvers.
absolutely.
Yeah. How should people connect with you? So High Peak, you want to give out your company website, social
Oh,
media,
sure.
where
It's www.highpeak.ai. You can find us there. If you click, I think if you click info, you probably get my email. We're still small, but we might be in a big company, but we're small and mighty. And I think that there's a lot of power in that.
yeah.
And very much appreciate the time, appreciate the audience, and have really enjoyed this conversation, Patty.
No, it's been very insightful. Big thank you to you, Sharon, for sharing your insights. And thank you for being on the FinTech Talk Show.
Thank you. All right.
Okay.